Welcome, dear traders. Hotter than expected US wholesale inflation data triggered a rally in Wall Street stocks. The optimism of the US stock markets spread to Asia today, and Japan's Nikkei also hit a 6-week high. Today's news from China added fuel to the global stock rally. Let's have a look at other factors that influenced Friday's trade. It's me, Kate Stichina, and you're watching a recap of the Asian session on September 15. Today's data showed that China's economy was improving. The country's industrial production expanded by 4.5% year-on-year in August, and this was the fastest pace of industrial production since April. It was driven by an acceleration in manufacturing and mining activity. The results of Beijing's support measures have yet to improve the country's economy. However, they are already having an impact on investor sentiment and helping to stabilize the economy. In addition, the People's Bank of China injected 139 billion yuan into the banking system through reverse repurchase agreements today. In addition, the regulator launched a total of 591 billion yuan via one-year medium-term tending facility. The moves are expected to free up more liquidity and potentially support growth in the world's second-largest economy. On the other hand, these measures could exacerbate the fall of the already crippled yuan, and the yuan is under tremendous pressure due to the sluggish economic growth and a series of interest rate cuts. At the same time, Beijing has been extremely hesitant to support the national currency this year. In addition, China's struggling real estate sector continues to send worrying signals. Property investment continues to fall. Meanwhile, Moody's downgraded its outlook for the Chinese real estate sector to negative. However, additional stimulus measures taken by the Chinese authorities slightly undermined the US dollar's leadership. In addition, strong reports on the US economy have failed to change forecast for the US Federal Reserve's interest rate. According to the FedWatch tool, 97% of the market expects the regulator to keep rates unchanged next week. As a result, the US dollar weakened amid optimism sentiment in the equity markets. However, the greenback was still trading above 103.50 near its 6-month high today, and the US dollar index moderately declined in a narrow range of 105.20 and 105.40. On the other hand, the strong US economy continues to support the rise in Treasury yields and favors US dollar bulls. The Japanese yen is also acting as a safe haven asset. It looks much weaker than the dollar in this regard, and the yen's strength was also short-lived after comments from a Bank of Japan Governor Kazuo Ueda earlier this week. The policymaker suggested that the country's economic conditions would allow the regulator to move away from its ultra-loose stance at the end of the year, and the dollar-yen pair stopped reacting to Monday's promises and resumed its upward momentum on Friday. Since the beginning of 2023, this trend confirms a strong bullish momentum. If the bullish pressure intensifies, the yen may weaken to 148. In the case of a decline, the first technical support awaits the pair at 145.90. At the end of the week, there will be no publication of the most important economic data in Japan, so the Japanese currency completely depends on its US counterpart. While waiting for new data on the US economy, the pair is consolidating in a narrow range of 147.30 and 147.80. Notably, yesterday's reports on Japan's core machinery orders slumped on a monthly and yearly basis, and the fresh data failed to support the Japanese currency against the backdrop of the Bank of Japan's ultra-loose monetary policy. Meanwhile, a batch of economic data from China supported the yuan as well as the Australian and New Zealand dollars. As a result, the Asian morning saw an uptick in sentiment for the antibody markets. At the same time, the Australian dollar approached the two-week high and even managed to pierce the high of 0.6470. In fact, the Aussie has been attracting bulls for the second day in a row and was trading higher in the range of 0.6430 and 0.6475 today. However, the Aussie dollar pair requires some caution when trading, especially since the fundamental background is still on the side of the greenback, and the US economic data that will be released later today may push the Australian currency down. A similar situation is unfolding on the chart of the New Zealand dollar. On a Friday, the Kiwi began with an uptrend. However, the currency dropped below 0.5935 and began to decrease. Despite the green price range of 0.5902 and 0.5939, the Kiwi ended the Asian session declining in the area of 0.5915. Notably, the country's Ministry of Finance said earlier this week that New Zealand would avoid double depreciation this year. However, the local currency is trading mostly lower. Concerns about the cost of living, trade and foreign policy, as well as New Zealand's high national debt, are all weighing on the Kiwi ahead of an election in October. And that's all for now. Leave your comments below and don't miss our next video review. Remember that staying up to date is the key to success in your trading. See you online soon.